welcome to First Mover, your first global look at the day's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two.
Good morning.
Good morning, Christine. You look great today. You're all chipper.
Thank you. I'm all chipper. I'm on the mend. I'm looking at Bitcoin. Bitcoin is doing super well right now. The XBX Bitcoin price right now trading at, $54,670. Bitcoin's up over 7% over the past 24 hours. And the ETX Ether price right now trading at 1833, up about almost 6% over the past 24 hours, according to TradeBlock data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmark against it. So, Lawrence, we're seeing this run up in price of Bitcoin. Also, the futures markets are also up. What's going on today?
Well, of course, you're not the only one in recovery mode. That happens to be crypto. 10-year yields are down just a tad bit from yesterday. So they're about 1.5% and 1.55% versus 1.6 yesterday. What's interesting is the past few days, the dollar itself, the U.S. dollar interest index has gone up. All things being equal, that moves in the opposite direction of crypto. So this is a serious rally. Open interest in Bitcoin futures is up, and we're seeing Bitcoin taken out of the exchanges. That's a bullish sign, and it's coming at a time when, of course, the $1.9 trillion stimulus essentially is coming out there now, about to get passed. And I think people are looking at that and they're saying, wow, that's a lot of money to be sloshing around the economy.
Right. Maybe a good time to buy some Bitcoin. All right, Emily, we also have some news from PayPal acquiring Israel-based crypto security firm Curve. What's the significance of this acquisition?
Hugely significant. I mean, it seems like ancient history, but remember, PayPal kind of started this whole thing, in my opinion. I mean, this bull run in many ways early on was sparked by this news that PayPal was getting into cryptocurrency because PayPal is such a mainstream tool. And so this is just a sign of PayPal getting further into the crypto world and, expanding its services and making it, easier for people to access crypto. And our reporter, Ian Allison, kind of had a scoop on this. He was the first one to report the early news on this. So I think it's very, very significant for the crypto world.
That's right. Ian reported on this last week, and it was confirmed by PayPal Monday. All right, let's take a look at the DeFi markets. Is the next step for institutional DeFi institutional NFTs? Ethereum-friendly custody firm Trustology is now supporting NFTs for lending and collateralizing it. Joining us now to discuss from London is Trustology founder and CEO Alex Batlin. Welcome, Alex.
Hi, guys. How are you?
Good.
Hi,
thanks for joining us. So tell me a bit about institutional NFTs. How does this work?
Essentially, it's NFTs, and the beauty of blockchain, of course, is that the asset is the asset. What starts to change is how do you safeguard the particular asset in question. So what we do as Trustology, we custody the private keys. So whenever a fund or any other corporate that wishes to purchase assets, such as NFTs, they can do so through our wallet, which means the assets are secure. And then they can apply various different spending rules, such as, who's allowed to collateralize or who's allowed within the organization to lend or borrow the particular asset. And all of that's managed by our Trustful platform. But then the NFTs just are part of your portfolio. You can use the whole ecosystem of DeFi apps like NFTFI for collateralization. You can use kind of platforms like OpenSea to buy and sell. So the beauty of this decentralized finance space is that it's probably the biggest global kind of marketplace of financial services. And the way you kind of interact with that is through wallets. And then you can either have self-custodied wallets, which is great if you are comfortable doing that, or you can use a custodied wallet, which allows you to make sure that somebody else looks after the security of this asset.
Alex, what kind of demand are you seeing for this? And who are your clients, and how are they using it?
Sure. We've come out with a DeFi-capable custodial wallet a few months ago now, and what we've been seeing is right now increasing interest, smaller funds right now, but we're seeing a lot of DeFi funds who are looking at DeFi yield farming. And the idea is they will be staking tokens, they will be hedging tokens, lending them, etc., using the various different protocols like Uniswap and kind of Compound and Aave derivatives. You're looking at DYDX, synthetics. And really what you're doing is you are combining all these different financial protocols and tokens through those in order to get yourself a leveraged yield. So we're starting to see more and more kind of initially smaller funds kind of experimenting in this space. And we're seeing larger funds looking to try out small amount of exposure into this. But of course, all of this is initially kind of lending, borrowing. NFTs is something different because most people have been working with fungible tokens. We're now seeing increased demand for non-fungible tokens, art and so on. So that's pretty exciting.
Hi, Alex. To that point, non-fungible tokens aren't fungible. That's in their name. So how does one go about using it as collateral? What kind of risks are people taking? How are they dealing with the risks? Especially when the value is so idiosyncratic to the rest of the market.
It's in some ways exactly the same as family offices and other institutional investors investing in art. Yeah. So what you're looking to do is create a basket of assets that you put together. And there's been, for instance, also, and it's not limited to art. Think about it as digital rights to music, books, etc. And we're starting to see, for instance, great article on the DeFi recently about the newer NFT standard that pays out royalties for music. So once you start combining those yield-bearing NFTs into your portfolio, and you start to kind of be able to come up with a very different type of product that has been available until now. So I think that's early days yet, but we're starting to see more and more kind of players coming on board and saying we want to manage this as a fund rather than as an individual.
So you just said the key words, early days. My sort of brief experimentation with the NFT world is that it's still kind of the Wild West, right? Like there's just so much stuff that we don't know. There's a lot of legal questions that are unanswered. There's regulatory questions that are unanswered. A lot of these sites are kind of crashing because they can't handle demand. Gas fees are kind of like all over the place. I mean, are NFTs really ready for prime time? I mean, it just seems like once you get into like the institutional space, like are NFTs ready for this?
I think they're based on exactly the same infrastructure that's now driving billions worth of trading like Uniswap. So a well-crafted smart contract like an NFT, that's all it is no more risky or less risky than any other ERC20 token. And then the kind of exchange and lending of those is no worse or no better off than any other ERC20 token. So I think, yes, if you are kind of on the more conservative side, you are probably going to be in the wait and see bracket. But for instance, kind of one of the funds that's working with us, Firmin, they're very much on the bleeding edge, figuring out how to do all of this. And then the question, of course, is who's going to jump in first and get the high profits. There is always going to be correlation between risk and reward.
So how does it work? What are the steps? Oh, well, sorry. I think we run out of
Thank
time.
you so much, Alex, for joining us. We've run out of time, unfortunately, but we appreciate your insights.
Your pleasure. Thank you very much.
All right, that was Trustology founder and CEO Alex Batlin. Next up, coming up, how Bitcoin is blowing away Goldman Sachs' leaderboard of global asset class returns. All right, let's check in on Bitcoin. The BTX XBX Bitcoin price right now trading at $54,621. It's up about 7.4% over the past 24 hours. And the ETX Ether price also trading up 1832, up almost 6% over the past 24 hours, according to TradeBlock data. All right, asset manager Bitwise has recently launched a decentralized finance index fund that has brought in over 30 million in sales in the first 2 weeks and is the firm's fastest growing fund. Joining us now to discuss DeFi, the crypto markets, and more is Bitwise CIO Matt Hougan in San Francisco. Welcome, Matt.
Hi, thanks for having me. Glad to be here.
Good to have you. All right. So, we have you in a CoinDesk article quoted as saying, in many cases, it took months of education and discussion for our clients, mostly financial advisors, family offices, and hedge funds, to wrap their heads around the core ideas of public blockchains and large cap crypto assets like Bitcoin and Ether. But you talk to them about the idea behind DeFi and using software-based dApps to disrupt traditional finance, and they get it instantly. So you're basically saying to people that they don't get Bitcoin, but they get DeFi. Is that right? Because I often don't get DeFi.
That makes sense to me, but it's 100% true. Look, the idea of Bitcoin is something we've never seen before, right? It's a new non-sovereign currency. It's a new digital store of value. People haven't seen this movie play out before, but we've seen lots of times the movie play out of new software-based solutions disrupting traditional markets. We've seen it play out in almost every area of the economy except for finance. So you talk to people about this new idea using software to disrupt the banks, and people are like, I get it. I can't wait. I can see how that happens. I know how that ends. I've watched Facebook. I've watched Amazon. I've seen this movie 1,000 times before. Let me get on board. And that's why it's been growing so fast and attracting so many investors.
Wait, that's so interesting. So just to follow up on that, though, I mean, couldn't Bitcoin be phrased kind of the same way? It's just disrupting banks. Like, why is it so hard for people to understand Bitcoin then?
Well, because the use case is so clear on DeFi. When you talk to people about Bitcoin, people have 1,000 different views, right? It's 13 different ways of looking at Bitcoin. It does this, it does that, but people don't see it in their day-to-day lives. When you talk to them about something very limited and focused, like disrupting the New York Stock Exchange, or disrupting Jane Street, or disrupting lending programs, or disrupting insurance programs, almost everyone has had a bad experience with one of those financial companies or one of those financial experiences. And it's such a clean replacement. And you can also point to the real dollar volume moving through it that I think is just much more intuitive than Bitcoin, which can be different things to different people and has seen its narrative evolve so often over the years.
Is there a specific DeFi? Oh, sorry. Is there a specific DeFi example that you give to people that makes them understand this? I would love to hear it, because people are always asking me about DeFi, and I find it very difficult to explain in a concise and compelling way.
Yeah, I use Uniswap because it's the largest asset in our index and because it is easy to explain. Look, what I tell people is you take something like Jane Street. What is Jane Street? Jane Street's a market maker. It's essentially a bunch of well-educated, high-paid employees who sit behind computers and let algorithms make markets and prices. And every once in a while they hop on the phone, or every once in a while they pull the plug, or every once in a while they tweak the program. All Uniswap is that. It's a market-making and exchange tool that's replacing the people sitting at high-paid firms like Jane Street or sitting at the New York Stock Exchange and allowing all of that market-making to occur during software. And guess what? Instead of institutional pools of capital and captive pools of capital participating and profiting from that arbitrage example, any individual can contribute to it. Any individual can play the role that Jane Street has traditionally been playing. Now, I want to emphasize to people, of course, that it's hugely risky, it's hugely new, but this idea that there are huge chunks of the financial economy that have grown fat and where people are making excess profits and can be disrupted by software, I think Uniswap is a great example of that.
Thank you.
So, Matt, who's buying into the index fund right now? What's the profile of the type of buyers?
Sure. There are really two classes of buyers in the DeFi fund. So one is Bitwise's core audience, which is financial advisors, multifamily offices, and family offices. These are the people for whom the idea of Bitcoin was difficult to get their heads around, but DeFi clicks immediately. And we're seeing real inflows from those people. The other piece, which is sort of unique for Bitwise, or at least new for Bitwise, is crypto native people. There are a lot of crypto native people who won't look at our broad-based index fund because they have particular opinions on Bitcoin versus Bitcoin Cash versus Litecoin versus ETH. But even a lot of these crypto native people understand that the DeFi market is so new and changes so fast that unless you're going to pay attention to it 24/7, 365, having an index-based solution that reconstitutes monthly, that monitors the market for risks, that diversifies you across everything that's exciting that's happening in DeFi is a good, easy button for them to push to make sure they have exposure to something that is growing so quickly. So we really have those two classes of investors.
So about the assets that are in the index, how are they chosen? And are they chosen to be so that the index itself doesn't correlate to things like Bitcoin?
Yes.
I understand that there's a committee involved and things like that. What do they do?
That's exactly right. So at one level, it's very simple. It's a market cap weighted index. Look, the promise we're trying to make to people is if DeFi gets bigger tomorrow than it is today, you'll be exposed to the best and most exciting projects in that space. But you and I know that DeFi is new and risky. And so we have a number of screenings in place to try to weed out assets that may have hidden or binary risks. That's where the advisory council comes in. We have this amazing advisory council, 5 of the most established VCs and sort of thought leaders in the DeFi space. And they help us look at the assets, not to pick which ones are going to be winners, but to pick out assets that may have risks, may be deemed a security by federal regulators, may have technological risks, may have security risks that are hidden and not yet exposed. And so we try to screen those out. After that, we let the market decide. And then we reconstitute every month. So new assets can come in if they emerge and are becoming significant.
Fascinating. Thank you so much, Matt, for joining us and explaining to us your new DeFi fund. Congratulations.
Thanks for having me on. I appreciate it.
Great. That was Bitwise CIO Matt Hougan. Meanwhile, Wall Street investment bank Goldman Sachs didn't start including Bitcoin in its weekly ranking of global asset class returns until late January, when the largest cryptocurrency quietly appeared atop the chart. Joining us now to discuss is CoinDesk research analyst Dominic Dantes. Welcome, Dominic.
Hey, good morning.
Hey, good morning. All right, so you wrote an article for CoinDesk titled Bitcoin's 2021 Returns Destroy Everything on Wall Street, according to Goldman Sachs. Did they really say that?
Not destroy, but the numbers speak for themselves. They were very much ahead of the rest, about double that of its closest competitor, energy and oil, which had a really good year so far. And it's interesting, when Goldman issued the report around March 4th, it was the first time, as you said, since January, they quietly put Bitcoin on their radar when it was up about 15%, and now it's about 80%. So it's definitely accelerated and taking some note on Wall Street.
Are there any signs that Goldman...
Sorry, but this is a big change for Goldman, right? A year ago, they weren't fans. So what changed? And how many Goldman Sachs clients are now involved with crypto?
Yeah, definitely changed. I think the head of their asset management or something like that division, advised clients that it wasn't as appropriate or prudent. And Bitcoin is not right for every portfolio given the volatility. So I think, just the returns in general, Wall Street likes returns. And I think if the returns were strong, especially during, a choppy year for equities and other traditional asset classes and the return of inflation, we always say, Tina, there is no alternative when you're in a choppy zone for most markets. And Bitcoin has shown its resilience. So I think Wall Street peers are taking notice.
Are there any signs that Goldman is easing up or warming up to Bitcoin?
Yeah, for sure. I think they issued out a survey to some of their clients, and about 40% have said that they are exposed to cryptocurrency, and about a third of them are interested in looking at it in terms of prime brokerages. So I think there is some big player interest involved in Bitcoin. And, just the fact that they're putting it out on their report, giving that to clients and other, peers on Wall Street is an interesting fact.
When do you expect to see Goldman getting into other crypto assets besides Bitcoin?
That's a good question. I think, they're probably adopting it just in terms of the interest for Bitcoin first, because it is the largest cryptocurrency by market cap, and it is kind of the gateway into other cryptos. So, if we see the relative performance pick up, especially with other cryptos like Ether and Litecoin over the year, that might spur some interest as well.
All right, awesome. Thank you so much, Dominic, for weighing in.
Yeah, thank you guys. Take care.
Take care. All right, that was CoinDesk research analyst Dominic Dantes. Coming up, crypto guidance from the National Credit Union Administration, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. All right, welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick.
Hey, how's it going?
Going well. All right, Nick, what are you watching out for today?
So the Senate Banking Committee is holding a hearing on GameStop today. I think it'll probably be very different from the House Financial Services Committee hearing on GameStop last month. Today's hearing features a lot of academics and a former SEC commissioner. So it seems to be focused, pretty largely on the specific actions of, Reddit's Wall Street Bets community and how it impacted GameStop, and more the actual stock market and how it intersects with the retail traders.
So, Nick, your newsletter today is really great. It's about some of the legal and regulatory issues surrounding NFTs. Can you give us the TLDR?
It's weirdly complicated.
That's the TLDR.
This is one of those things where I posted a Twitter comment on, I think, Thursday, asking, hey, he wants to talk about NFTs and legal issues, and I had like 50 different people hit me up and say, hey, we have thoughts. And unfortunately, I couldn't use all of them. But basically, there are a number of questions about who actually owns what when you're selling an NFT. What are you buying? And is it clear that you're buying what you think you're buying, right? Just so to use one example, this started when I sold some tweets. And so my question is, did I actually sell tweets? Because the tweets are still there on twitter.com. Anyone can see them. And so it turns out that I did not actually sell the tweets. I sold like a digitally autographed version record that the tweet existed at some point. And so basically there's just a number of consumer protection, copyright, various questions that I guess have to be addressed at some point if they aren't already looking at it. But yeah, as you said, the newsletter gets really weirdly in depth on that.
Nick, getting back to the Senate Banking Committee, what do we know about the witnesses called before to talk about GameStop today? Do we know anything specific about them?
Yeah, there are, as I said, a lot of academics on here. So you have an expert in market manipulation, Duke Law Professor Gina Gale Fletcher. You have a former SEC commissioner, Michael Piwowar. So it does look like they're going to be looking at, not just, why did the price go up, but they're going to be looking at, is this market manipulation? Is this something that can be, mitigated in future? The opening testimony for some of these witnesses kind of touch on that. They, as I said, Professor Fletcher's testimony addresses, is what Reddit's Wall Street Bets community did market manipulation?
Fascinating. All right, we'll be watching out for that hearing. And if you want to buy your tweets, we know where to head over to do that. All right, thank you, Nick.
Thank you.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Meanwhile, the National Credit Union Administration could be the next federal regulator to dig its feet into crypto-related rules. Joining us now to discuss is Kyle Hauptman, Vice Chair of the National Credit Union Administration in Washington, D.C. Welcome, Kyle.
Good morning, guys. Thank you.
Good morning. All right. So, Kyle, you have said that credit unions will want to look at digital assets and blockchain technology, and that your agency may consider providing guidance around the treatment of cryptocurrencies. Are credit unions the ones asking for greater regulatory clarity?
Well, in general, they always want clarity. It's not enough to say that something isn't against the rules. You often want to see something in writing, if you're a compliance officer, that says this is okay. And what we do know is that one of the other four banking regulators, the OCC, put out guidance in the last year around the use of stablecoins for payments and custody of digital assets. Those weren't rules, they weren't new laws, obviously, but they just clarified that normal activities that these institutions have always done, make payments, hold assets, and updated them. They updated this guidance for the new era we're in. So all I've said is that we benefit from the fact the OCC went first. They already did some of the work. And we want to see how much we could maybe copy and paste. It's not going to be a copy and paste. Credit unions are different. But as a starting point, look at that. And we want to make sure that we're ahead of it, not behind it, if that makes any sense.
So what exactly could credit unions do with crypto? Can you sort of break this down for us?
Yeah, and I'm going to have a common theme here, which is look at what the OCC did, right? OCC is much larger banks. Credit unions are pretty small. But if they wanted to be a node on a network to verify transactions, that could be something they do if the NCUA goes along with doing what the OCC did, or a version of it, okay? Now, using stablecoins for payments. As you know, the U.S. Has been ahead in so many things when it comes to technology, the home of Silicon Valley, but our payment system can still be a little creaky. And so the use of stablecoins for payments, so we can get closer to real-time payments that they've had in other countries for years. That's one use right there.
Kyle, as you said, of course, credit unions are different than banks for many of our non-American viewers. So what are credit unions, and how are they different than banks? How large are they? How many people belong to one?
Yeah.
And what?
So a credit union is a nonprofit. They have members, not customers, but to the layperson, you have a checking account, they make loans, you may get a car loan or a mortgage through a credit union. They're just nonprofits. And in the United States, we have four main banking regulators: the Federal Reserve, which is also a central bank, obviously, the FDIC that provides insurance, and the OCC. The fourth is what I do, the National Credit Union Administration. There are 5,100 credit unions that we at the NCUA insure. There are over 100 million Americans. About 1 out of 3 Americans is in a credit union. They're usually employment-based, meaning their field of membership will be, say, the pipe fitters or the employees of Boeing, right? Now, over time, that's expanded. But in 1970, Congress created a separate regulator for America's credit unions. Again, they're very similar to a bank. And those of us at NCUA, we provide a function similar to FDIC. All of your checking accounts and banks are insured by FDIC for up to $250,000, meaning if it collapses, FDIC writes a check to make the depositors whole. NCUA does the exact same thing. We insure deposits up to $250,000 for credit union members. And so because one of my main jobs is protecting that insurance fund, we want to make sure that credit unions have all the tools they need to adapt to a world that may become closer to a decentralized finance world.
Fantastic. Thank you so much, Kyle, for joining us and sharing us your insights.
Thanks for having me on.
All right.
Thank you.
That was Kyle Hauptman, Vice Chair of the National Credit Union Administration. All right, that's it for First Mover. Coming up tomorrow is special guest, Potomac Global Partners CEO and former SEC Commissioner Paul Atkins. Thank you, Emily Parker and Lawrence Lewitinn, Managing Director of Editor of Global Capital Markets, and Emily Parker. I'm getting my titles confused. CoinDesk Managing Director of International Content, Emily Parker. All right, and I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. You're watching CoinDesk TV.